Hello guys and welcome to Hackman Traders. In this video I'm going to be showing to you how to recognize an exit point of a certain stock that you hold for quite a long period of time. Now there are certain stocks that you invest in maybe today, and you on the is on the mindset that I'm going to sell the stock after a year, and a year and so until it gives me much more profit. So how to let's say you have invested in that type of stock, and how to know that this is now a great time to get a step out of that stock and diversify your portfolio. Now I'm going to now let's get started with the video so you can better learn how to do that. Now as you can see that this was the previous hit by the pandemic COVID-19. You can see that it was trading in 11. Look at these areas. 11 sorry, where is it? Yeah, right here, 11.88. It closed at 11.88. Now if you've invested here and sold your stock at this point 166.65, so how much total profit it gave you from here up till here? Can you guess how much profit it gives you? Now I also don't know, but it gives you more than 1000%. That's my calculation. 100% is double, so it give you 1600% profit. Yeah, nearly 1600 plus profit it give you. So to better understand this, now let's say the market is at its lowest low right about here, and the market is now trading upward. Stock is going up in value. Now this area also comes, you can step out at this area as well, but you say no, let me hold on to it, and you hold on to this stock, and then it went further up, giving you massive profits up till here. So now let's form this as our resistance level. You can also use technical analysis in this case, but you will also have to keep an eye out on fundamental analysis as well, because those also play an important role in the running of the stock market. Now you can see that this is support level. You can see now this is the support level and this is the resistance level. These support and resistance levels are formed at various points in this while reaching up till this point. You can see right here, again here. Now these one are the actual ones, so you will have to consider these are the support level. You can take, sorry, I will take this one. Yes, now these are great areas of support and resistance level. Now when now if the trend is trading in between the support level and the resistance level, now this is a great place. Do not exit at this level, and if you exit, who knows how much profit you have made. If you exit at this level, that's great, you can gain much profit. But what if it broke this resistance level and went further up? Nobody knows about that. So nobody knows if this can happen. But if you step out of this area, you've also made a ton of profit. But let's say hold on to this stock up till now, and I'm going to show if this stock sorry, let me start from the beginning. Let's say if this stock went up like this, and you have sold your stock at this point, and then it came back down, and then it went up. So in this case, you couldn't have made this much profit until you can enter at this level as well. But what if this stock comes down? If it comes down like this, sell your stock at this level. This is a great exit point for the stock that you hold for a long period of time, because you can see that this stock will now go down in value if it broke its support level and start trading in the downward direction. This is also called timing the market. Timing the market, when buy when the market starts to went up. Let's say the market has launched from here and you've bought at this level, and now the market has reached its highest of these and you've sold it at this level. So this is called timing the market. Now this is also a great area, this is also a great strategy to use, because you can know, you have clearly defined your exit point at which is this level. as it crossed this line, trade up, touch this line, confirms its position. This is called confirmation of that trend, and then it moved upward. So you'll have to exit at these area. This is a great exit point. This is a great exit point, and exit immediately at this level. The other thing you can use is, the other strategy that you can use is that with the help of what do you call that, risk manage, no sorry, stop loss. Now let me explain this to you as well. The other strategy is stop loss. You've came up till this point, plotted your stop loss at this point, and then when it start to move upward, move the stop loss along with your trend line like this. So as it broke this trend line, let's say your stop loss is this level, is broke this trend line, immediately sell it. Again it came back down, you've invested here, this is your stop loss. So move along the trend as the stop loss, move the stop loss above this. This is called trailing stop. So this is also a great strategy to use, because you know that you'll have to keep a trend on the stocks, on the profits that you've made. So what it basically does is that if your stock is at this point, so you've invested back here at this level, and then you've hold the stock up till this point, and now you've plotted this you've plotted this area as your stop loss, and as it reached this line, this touch this stop loss, trailing stop, you would have gained this much profit. So this is also a great tool to use, because you know, this is also a great tool to use because you can see that you have locked in pretty much a lot of profit as well. Again, if you want to make more profit, invest there. Let's say invest here, define your stop loss, move the stop loss along with it right here. Again it touched this trend, cross this trend line, again it touched the stop loss, move down, and as it is starting to move down, sell your stock at this level and immediately step out of the market. Now as it is again recovering, enter into the market and move along the trend. So this is also a great tool for the traders to use, as I've showed to you that it clearly defines your stop loss and risk management. There is one other tool you can use for the stocks that you've held for quite a long period of time. This tool is used basically for to determine the take profits and risk management, how much profit you want to make and how much with how much risk you want to step out of that market. So this is basically used for that purpose, and not for not to show you when to exit and when to enter. The best strategy to use was the trailing stops and the support and resistance level. The trailing stop was the most effective to use in this case, because it clearly shows you how much profit you want to make and with how much profit you want to exit the market. So both of these strategies are useful, and in this case, let's say if your stock is at this level, plot it here, no sorry, let me take this one, plot it here, and then define this as your exit point. Now as it reached this start to decline and start to cross this go outside of this cloud, immediately sell the stock, because you know that's not going to make you much more benefit, much more benefit if it start to decrease. So exit at this point immediately, and this also can be used as trailing stops. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.